Bitcoin values have been volatile recently, falling below $30,000 yesterday. On May 12, 2022, the market value of the world's largest digital currency fell to less than $26,500. The coin reached its lowest since December 2020. Since then, the Bitcoin has recovered slightly, increasing to $27,800. Now comes the questions. So, what is the future of Bitcoin? Where's the price heading out? Hey everyone, in today's video, we will take a look at the question, why did Bitcoin fall below $30,000? But before we get further into the video, we have a gift for you. You can now get $10 in free Bitcoin, all by just checking out the links in the description. So, let's dig right into it. Key market drivers. Analysts have identified a variety of variables to explain the recent dips, including central banks raising benchmark interest rates and dumping assets amassed during the recent crisis. Several market experts attributed the recent decline in Bitcoin prices to risk-off trading. Scott Milker, the presenter of the Wolf of Wall Street's podcast and a crypto investor and analyst, commented on the situation. Bitcoin has fallen alongside global markets as traders and investors risk off in the face of recession and inflation concerns, he stated. Bitcoin dropped to below 30,000, the tail end of which was largely the result of the Luna Guard Foundation dumping Bitcoin on the market in a desperate attempt to fix the UST peg, said Milker. This was insult to injury on a down day. Technical analysis. Milker also provided technical analysis, highlighting critical levels of support and resistance that traders should be aware of. The 30,000 psychological level remains important, although technically 33,000 is the area to watch for bulls to attempt to flip key resistance back to support, he stated. Whilst the market has been fixated on a move below 30,000 in BTC being the key level, last night's dip below was actually the fourth such move in the last 14 months, he stated. The key support for us is at 29,000, a break of which targets a move to 25,500 and ultimately the significant support at 20,000, which triggered the rally last year when it broke, said Usher. And unfortunately, as you can see the charts, the price have crashed a lot below 29,000. Now, are we expecting a dip of 20,000? Time will tell. Since mid-February, BTC formed some intermediate support around 33,000 to 34,000. Breaking that level downward yesterday opened up the way to major support around 30,000, he stated. That level is in play since the start of 2021 and should be considered a major support level, said D. Campanier. A clear break lower will free more downside risk as the next serious support level is only found near 20,000, which is the peak of 2017 and a cluster of smaller peaks and highs in November 2020, just before the break that took BTC all the way to 65,000, he added. In addition to providing the input, the analyst also spoke to resistance. Breaking those support levels means that they will now come back as resistance and block BTC advances in the near term. The former aforementioned support level in the 33,000 to 34,000 area is now the first resistance level to watch. Usher also identified some important areas of opposition. Resistance levels are stacked up at 33,000, 34,700, and ultimately 40,000, which needs to be regained to call a longer-term low in place, he stated. Potential market turbulence. According to Colin Plume, CEO and founder of My Digital Money, Bitcoin prices could face significant volatility in the coming months as the uncertainty around Federal Reserve policy decisions affects cryptocurrency markets. There's a possibility Bitcoin could bounce around wildly in the next couple of months, said Plume. In fact, I wouldn't be surprised if another sell-off happens to push it down. Investors are seeing the Fed interest rate hike and all the uncertainties that come with it as a buy opportunity. The next Fed meeting won't be for another month, and we are certain another interest rate increase is coming, he stated. Only then will investors have confidence in where prices are headed, where assets are headed, and where their investments are headed. What does this price drop mean for crypto investors? Price oscillators are to be expected for individuals who invest in cryptocurrency for the long term, utilizing a buy and hold approach. According to Humphrey Yang, the personal finance expert behind Humphrey Talks, big dips are nothing to be concerned about, and he avoids reviewing his own accounts during dangerous market dips. I've gone through the 2017 cycle too, Yang says, referring to the 2017 crypto crash, in which many major cryptocurrencies, including Bitcoin, lost significant value. I know these things are quite unpredictable. Some days they can fall by as much as 80%. Experts advise keeping your Bitcoin investments to less than 5% of your overall wealth. If you've done so, don't worry about the swings since they'll continue, says Bill Noble, chief technical analyst at Token Metrics, a cryptocurrency analytics company. Volatility is as old as the hills, and it's not going away, Noble explains. You just have to cope with it. Yang advocates employing the same method that works for all long-term investments. Set it and forget it, as long as your crypto investments don't interfere with your other financial goals and you've only invested what you're willing to lose. If this type of extreme drop disturbs you, you may be putting too much faith in your cryptocurrency purchases. You should only invest what you are willing to lose. Even if the dip has you reconsidering your crypto holdings, the same advice applies. Don't move rashly or change your approach too hastily. Consider what you would be more comfortable with in the future, such as allocating less to crypto or diversifying through crypto-related equities and blockchain funds rather than buying crypto directly, though you should still expect volatility when cryptocurrency markets fluctuate. Don't double-check it. That is the best you can do. If you allow your emotions to take over, you may sell at the wrong time or make the wrong judgment. Keeping the faith. Regardless of what happens in the digital currency markets in the short term, investors should remain optimistic, according to Konstantin Boyko-Romanovsky, founder and CEO of Allnodes Incorporated. Whether you invest in Bitcoin or other blockchains that will rise in the next bull run, the sentiment remains the same, he stated. We are past the point where blockchain and cryptocurrencies can become obsolete suddenly. So a sharp swing downwards in cryptocurrency prices might be a chance to enter or re-enter the market, said Boyko-Romanovsky. With that being said, here we come to the end of our video. I hope you like this video. If so, then don't forget to subscribe to the channel so you never miss any videos. See you in the next video. Till then, take care. Thanks for watching.